Achieving a goal of $3 million in 5 years through investing requires a combination of a significant initial investment, continuous savings, and investing in high-performing stocks. For this plan, we'll focus on stocks that have demonstrated exceptionally high returns over the past year. Carvana Company, CVNA, Immunogen Inc., IMGN, and Golden Heaven Group Holdings Limited, GDHG. Assumptions: annual returns of 560.8% for CVNA, 491.7% for IMGN, and 438.2% for GDHG, their annual returns in 2023. A salary of $100,000 per year, saving 50%, $50,000, annually. This high savings rate is critical for this aggressive investment strategy. Initial investment. With $50,000 saved in the first year, this amount is invested equally across the 3 stocks. Year 2-5. Aggressive investment and compounding. Annual reinvestment. Continue saving $50,000 each year, reinvesting these savings along with the previous year's returns into the stocks. Compounding growth. With such high annual returns, the compounding effect will play a significant role in reaching the $3 million target. Portfolio monitoring. Due to the high-risk nature of these investments, constant monitoring and adjustment of the portfolio are crucial. Calculating the potential growth. End of year 1. The initial $50,000 is invested. Assuming the average of the 3 returns, approximately 496.9%, the investment would grow to $11,920. End of year 2. The total investment is now the sum of the first year's return plus another $1,000, totaling $77,003. Year 3 earns $464,899.07. And year 4 at the same rate of return gets you $2,776,758.47. Because of compound interest, at the end of year 5, your total earnings are over $16 million. Risk management and diversification. Diversification. Given the extremely high-risk nature of this strategy, diversification is advised. Investing a portion of the portfolio in lower-risk assets can provide some security against market volatility. Regular reassessment. Regularly reassess the performance of the stocks and the overall health of the market. Be prepared to adjust the strategy if the market conditions change or if the stocks do not perform as expected. While this guide outlines a path to achieving financial freedom in 5 years through aggressive investment in high-return stocks, it is crucial to acknowledge the exceptionally high risk involved. The assumed return rates are extraordinary and not typical of average stock market returns. This plan should be considered a high-risk strategy, and it is always recommended to consult with a financial advisor and consider a more diversified and balanced approach to investing, especially for long-term financial goals like achieving financial freedom.